Money making money making money.
Come on, you gotta tell me, how is this even possible?
It's easy. 1, you take your money and you put it in this secret spot. 2, you let that money grow with compound interest. 3, then you find a place for that money to go where it can work for you. 4, and then every Wednesday at 1 p.m. Eastern, you join me for a wealth webinar.
I'll do it.
It's free. Plus, if you join me now, you'll get my free ebook that teaches you to get all the money back for every car you buy, drive, and own. So take advantage of this opportunity and I'll see you there.
Hey, are you ready to take control of your financial future? Welcome to Private Money Club. Private Money Club is the ultimate online platform connecting real estate entrepreneurs with private money lenders just like you. Whether you're looking to fund your next deal or lend money to grow your wealth, Private Money Club is your go-to resource. You can post deals, find funding, connect with other like-minded professionals. It's just a community. It's a community that you need to plug into. If you're new to the game, no problem. Our Learn platform and our weekly coaching webinars and our on-demand resources are here to guide you every step of the way. Join a thriving network of real estate experts who are already making an impact, and they're waiting to partner with you. So Private Money Club gives you the tools, the training, the connections, and everything you need to achieve your financial goals. So why don't you start now by going to privatemoneyclub.com. We'll see you inside. Hey, you need to become your own bank. And it's as simple as changing one thing, and that is where your money goes first. I mean, think about it. Household debts in this country are at all-time highs. You got tons of market volatility. You got the potential for Social Security running out of money. You've got global uncertainty, political divide, and you have to figure out where you're going to put your hard-earned savings. I mean, this is one of those times in history where the rich are getting richer, and it is time to learn the secrets of the wealthy. But here's the good news. Every single Wednesday at 1 p.m. Eastern Standard Time, I put on a free webinar where I teach you how to take back control of your money by teaching you how to become your own bank. So click the link below and let's get started. So let's go into the app, because the app was created after a dating site, believe it or not. So people with money and people that need money. Phone, swipe left. Swipe left. Ooh, I like that one. Swipe right. You want to go on. If you got money, you want to swipe left through all the deals. When you find one you like, boom, you're connected. How much more difficult does this really need to be? This isn't rocket science. They want you to think it is because they want control of your money. It is time to take back control of our money. I want to invite you to a free interactive webinar that we're doing to teach you how to get prepared for what's about to happen and how you can grow, preserve, and protect your wealth and get it ready for a recession or maybe the next Great Depression. So all I need you to do is click the link below. You're not going to want to miss this with all this stuff going on. Are you sick of having your money lying around not doing anything? Well, we've got the solution for you. PrivateMoneyClub.com. Back to you, Chris. So that's what it is. Private Money Club was created for you and for all of us. So I've got something special. Since you're here, you're listening to us talk to you about the infinite banking concept, I wanted to make an offer. Private Money Club is something that will benefit each of you, but we've got what's called the Accelerator. The Private Money Club Accelerator is a coaching program that takes together the knowledge that you'll need to be your own bank and puts it together with the opportunities in Private Money Club so that now you learn and apply the knowledge. Check it out. We got a very special offer for you to be part of the next Accelerator coaching program and get you into Private Money Club so your money starts working for you.
Hey everybody, it's Buff Finance Guy here, ready to show you how to make some serious gains. But not only in the gym, with your wallet too. Most people put their money in the bank doing absolutely nothing for them. But I'm gonna show you how it doesn't have to be that way. So take Andrew here. His money has just been sitting lazy in the bank. But all he has to do is change one thing, and that's where the money goes first, and everything changes. Just change where your money goes first, silly.
Wait, just one change?
Yeah, that's it. Instead of sending it to the bank, you send it to your very own banking system. your money can grow and get stronger, just like me.
It's time for Money School TV. You heard it straight from the horse's mouth.
He's been on the fence to come to PMC Money Take. I'm telling you right now, you're missing out on a treat.
This is the ultimate watering hole for lenders and borrowers.
If you've got decent deals, you'll find the funding for it.
The networking here has been fantastic.
Absolutely phenomenal.
Tremendously beneficial.
Oh my gosh, so many people to network with.
First day, I probably met 5 or 6 people. They show me ideas, I show them ideas. We're actually on stage about 20 minutes ago, and since then, I've already had about 20 people reach out.
There are several people that I probably will be doing business with.
I have like 15 private lenders ready to fund my deals. The people here are amazing and so welcoming.
You walk in, everyone greets you right away. No one is a stranger.
It's just an amazing and comfortable place to be.
There's so much stuff that I've been able to learn that I didn't know. I've had aha moments over and over again.
They talked about normal rates of return, not 6%, we're talking about 10%, but in a way that's ethically sound and stable. It's full disclosure, but helps walk you through everything. They even talk about it on stage of like, we've already made the mistakes, so here we are, and we're teaching you to not make the same mistakes. You get to learn from us, you get to just follow our direction and just see what you can do. I've gotten great things out of the virtual events, but there's no comparison to actually coming here, experiencing the energy, and getting to meet all of the people. Everyone is here looking to grow in some capacity. Being in this environment, it allows you to feed on that and foster that.
During the event, they had a lender-borrower meet and greet, which is pretty cool. It's different when you can spend some time, have a meal together, hang out, joke around. The people are just a blast.
It's so much fun.
The community of the Money Tank PMC, the whole crew with Chris, Stephen, Jonah, everybody, and Joe, they've all helped me out. It's been changing my life.
You're gonna learn something, you're gonna meet someone, and it's definitely gonna make a big difference in your business. Not by a little bit, but by a lot.
I mean, you could stay stuck thinking you can do it on your own. Was a lot of people that I talked to is their issue, and then they come here, and I talk to them a year later, and they've grown so much just by coming to this event.
Started at $15,000 in credit card debt. As of today, I have $550,000 out in private lending. That's what this teaches you.
I tell people all the time, you have to get in the room to be around the like-minded people.
Go. It's worth it.
Just come. Do it for yourself. Do it for your business.
Take action. You got to do it.
Come to the event. You don't want to miss it.
Well, the biggest thing I hope that people get is something that they can actually apply in their lives. You know, that's the biggest thing for any of these events that we want. We want people to leave here not just riled up, not just excited, but actually going out and doing something that'll put them in a better financial situation, help their family. And for the speakers, my goal is that they go out and they impact the audience and bring something the audience never had exposure to that allows them to then fill in that piece that they're looking for. I'm going to be talking about more lease options. I'm going to be talking about equity shares. I'm going to be talking about a bunch of fun stuff today. Because again, I'm not here to teach about how to do those deals. I'm here to teach about how to invest in those deals.
Filled with individuals that are like-minded, that are at the top of their craft, they're at the top of their game. And for anybody that's an attendee, it's just a mind-blowing experience.
It's almost going to be hard to speak anywhere else but here because it was such a great experience. I felt like, I don't know. It was amazing. Nothing less than amazing, literally.
At the PMC Money Tank event, which is an epic event that we're putting together that does one thing and one thing only, makes everybody money. It brings people with money together with people that need money. It's like a peanut butter and jelly sandwich. You just smash them together and everybody wins.
Wednesday, 10:30 Eastern Standard Time. Going live!
Welcome back, everybody. Another week, another What the F happened. And we are in celebration of several different things. The World Cup in U.S. doing well. But not only that, 250 years. So we're all sporting the red, white, and blue. As you can see, Steven's always got the best outfit. That's about all I could find. But with that being said, let's talk a little bit about what WTF is going to be. This is a show where we're going to rant, we're going to rave, and we might even argue, lots of arguing. That's kind of what this show has come to be known for. And we're going to talk about the economy. We're going to talk about the things you don't so much see in the news and some stuff that you do see in the news, but spun differently than the CNBCs, CNNs, or Fox Newses are going to report them on. And I want to give you just a couple of things. I want to talk a little bit about gold today, and how gold is facing one of the worst quarters in 13 years and how the dollar is surging right now. We're going to talk about Anthropic's Fable 5, Claude Fable 5, and how that was kind of taken off the market because of fears, and now it's going back on. We're going to talk about private payroll, one of the major gauges as to how the economy is doing. And we're going to talk a little bit about the auto industry and a big deal, a $2 trillion trade deal with Canada and Mexico that's on the chopping block, or will it get extended like always? But the other things we're going to talk about is how don't always believe that FDIC insured means your money is safe, especially when you're talking about these online apps, because there was a little thing that happened. This company called Synapse Financial. Well, we'll get into that and find out how roughly about $265 million for 100,000 people might be gone, even though it was FDIC insured. We're going to talk about Comcast. As you probably have heard, Comcast is split. And why is the question? Social Security. Well, no surprise to any of you, but it runs out of money in 2032. Yep, 6 years from now, Social Security is broke. But will that mean that they're going to reduce Social Security income for seniors? Will that mean that Social Security just goes away for all of us? Well, we'll talk about that. But all I want you to remember is buyers, okay, buy votes. That's it. And 1 year, we're going to talk about the whole recap of inflation. We're going to talk about the recap on the economy, on payroll, and all those things. And we're also going to talk about how Nike screwed the pooch when it comes to the World Cup. I also want to introduce my couple co-hosts. We got Mr. Snaggy in the house, all done up in USA gear. What's happening?
Hey, what's up, guys? Yeah, happy 4th, happy 250. Happy World Cup, happy everything. It's a beautiful day. Busy down here in South Florida. Beautiful sunshine lately. Very, very hot outside. And yeah, man, just a lot going on. Looking forward to getting into it, all of it today. Really been distracted. My son's had all-star baseball going the last week. We played 6 games over 8 days. So it was like a marathon going with that. We got the World Cup going on right now. So I've been watching those games. Baseball's in kind of fun swing right now and just prepping for the 4th of July. So haven't really been paying attention to the specific news. So looking forward to getting into it a little bit today. And I'm sure I will find something or another to fight with St. James about. So what's up, St. James? How you doing, man?
Good morning, Stephen Nagy. Good morning, Chris, and good morning to all of you from all around the world. WTFers, happy Canada Day to our Canadian visitors as well, and viewers. And of course, a huge happy birthday to the United States of America. Love it or hate it, we are here and we're going to make the best of it. It's been a busy couple of days. We've had some big news, some small news, and everything in between. And you know what? I'm really glad, guys, that we're going to get a chance to talk about, in particular, the World Cup, because it's giving the United States people the exposure that they really deserve. And I'm really looking forward to that story that we have coming up. And guys, we got a lot of ground to cover. So what do you say we get to it? How's that sound?
Yeah, let's do it. Let's dive into the economy. I think this is the starting place is talking about FDIC insured, right? Everybody, well, yeah, I suppose everybody probably feels pretty safe and secure when your money's in a bank, when your money's got an FDIC insured balance up to 250,000. And, you know, I will say definitely when all those banks went down a couple of years ago, they were pretty happy. They were FDIC insured too, because I think everybody was made whole in light of the run on the banks and the basically just the disappearance of some pretty large banks out there like Silicon Valley Bank and Republic and all those. But we're not safe. And I think you all need to be really careful with this, because right now everybody's chasing high yield savings accounts, right? There's tons of influencers talking about high yield savings accounts. I was blown away. My wife always sends me these influencers who really don't know anything, but they're just like, oh, I put my money in high yield savings and I'm getting this. Well, a lot of people did that, but here's something that just happened. Okay. Synapse Financial. You don't need to know the name of this company, but they were the intermediary in between. They were like, think of it as the plumbing between your sink and your septic, or your sink and the public sewer, right? That they were the plumbing in between. And if that plumbing breaks down, well, I don't know. I'm sure some of you have had to plunge a few toilets, but you get the point. Well, that broke down. There were 100 neobank apps. Now, you may not have heard of neobank, but that's most of these high yield savings banks and these online banks, which include Yada, Juno, Dave, Mercury, and there's a whole bunch of other ones. Well, this Synapse Financial filed bankruptcy in April of 2024. And you know what? None of you have heard anything about it, unless you were one of the 100,000 people that put money in one of these high yield savings apps. And now all of a sudden, your money, well, they can't find it. They can't find it. The partner banks that are holding the cash can't match the deposits because the break in the plumbing. This is a big deal because FDIC, it was brought into this. Obviously, we're talking 2 years ago this happened. FDIC was brought in and they're like, yep, sorry, you deposited the money in an app, not a bank. We're there to protect the banks, but you deposited it in an app. But the app, and through this grand jury investigation, the app, every one of them said FDI insured. But does that mean that these depositors are going to get their money back? Well, right now, there's 100,000 people who lost access to $265 million. Actually, Stephen, can you do some math for me? Can you do 265 million divided by 100,000? I just want to know what the average balance is. And right now, 65 to $95 million of that 265 million is unaccounted for, literally unaccounted for. So this is definitely something that I think a lot of people should have heard about before this, because it would have saved a lot of people from making mistakes and going into these online apps that say FDIC insured. You might want to kind of go one step further and understand what the FDIC insurance is. The FDIC insurance is only when the money's deposited in the bank, but if the money's got to go through the plumbing to get to the bank and the plumbing breaks down, has a little bit of, well, could it be wire fraud? Could it be bad bookkeeping? I don't know, but that invisible middleman matters because the poopy's backing up right now. What do you got to say about that, James?
You know what? It's interesting. So FDIC, as many of you know, is the Federal Deposit Insurance Corporation of America, which insures balances of up to $250,000. And it was basically put into place when a lot of these banks started failing, so that the government could say, hey, we've got a safety net for those of you guys who are trusting big banks and they fall apart for whatever reasons possible. And what I really find troubling about this is that a lot of people who were involved in Yada and some of the Mercury Bank, these were people who were offered the promise of, hey, if you use this bank, you're going to be entered into a Powerball, a lottery style terms of a reward for using this particular bank, and to people of financial distress or not distress, having this huge reward, this huge payout that, you know, you're going to be able to get huge money from your bank. How rewarding does that sound? And because of this, you're saying, well, it's FDIC approved, so that means my money is safe and I'm able to see this fancy app that's nice and colorful and modern. What can go wrong with a fintech company? Well, you see, what happens is the money migrates from one person's traditional bank account into Synapse, which they were never even aware of, into this particular holding company like Evolve Bank and Trust. And unfortunately, Synapse itself, the middleman company, as Chris mentioned, went down. So now people are just being held up. They're like, where's my money? There are people, Chris, Steve, people who had $95,000 in savings in these particular financial institutions. All right, not Synapse. Synapse is just banking as a service, BAAS. They had $95,000 being held in this account, and they're offering settlements of $120. Like, here's all this money that you owe to us, and then here's the payout that you're going to receive. Oh, 100,000, here's 20 bucks. And the forensic accounting on this is absolutely terrible. And it's kind of like the Spider-Man meme where everybody's pointing to each other and when they're saying, where's the money? Oh, well, the money's over here with Synapse. And meanwhile, somebody else over here at Evolve Bank is pointing this person over here. No, they had it over there because they had absolute garbage accounting. They had variances of over $10 million in variances in banking between one ledger to another. And
James, look at some of the chats here. I didn't mean to cut you off, but like we got this one right here, declared ruler coming in from YouTube's got money stuck in Juno.
Yeah.
We also have Damien who wants to have a beer with Steven. I'm sure Steven would love that. Damien's over in Thailand right now, loading the fleet, but going to be making his way back to South Florida. Somebody else just mentioned that they had money stuck. Let's see.
I had money, a lot more money stuck.
I thought there was one other one, but nonetheless, so like right here in this audience on this show, which is pretty late today, we've got people who have money stuck in this exact thing. Yet this is the first. Almost every single person that watches this have heard of this.
That's absolutely incredible. And we have to ask ourselves, like, the only person that held FDI insurance, which is a bit of a misnomer, was Evolve Bank and Trust. And they held, Chris, get this, they held all the money. Let's just say it's you, me, Nagy, we're all, people who have money in this particular bank, and we'll say it's in Yada. All of our money was held in one account. That's it. And Synapse held the ledger for where that money was actually divvied up. So somebody else, we're going to say Damien is Synapse. Damien knew how much money was allotted to each particular person. So now Evolve Bank and Trust is sitting on this lump sum of money that has mysteriously disappeared, and Synapse is in the wind. And because Evolve Bank and Trust is the actual FDIC bank holder, chartered bank, Synapse is just like, oh, well, we don't really have the insurance. Those guys got the insurance. Wow. Take it up with them.
The crazy thing too about this is, I don't know. I mean, so many people put so much emphasis on, FDIC, and now it's breaking down. But I got to ask, like, I'm assuming that this wasn't blockchain, right? Because I'd have to believe that if this were a blockchain transaction, this couldn't have happened, because there couldn't have been any muddling around with the plumbing in between with this Synapse company. So I think that I'm not saying like we all want to go to, that, but like Ethereum and, the blockchain and the record keeping on that, this is the problems it solves. So when you're thinking about investing and you're looking at crypto, understand use case for these different things you invest in, because this is a real life scenario of use case. Like, this is a use case breakdown in the way that technologies operate today versus blockchain. I don't know. I just wanted to throw that in there. Steven, any comments on this?
Oh yeah, you're spot on with the ledger and the blockchain. I mean, right now it's just a mess. I mean, the way money moves around the world. I mean, I read one thing. It said it makes like hundreds, if not thousands, of little like micro transactions as it moves all through the ACH network and all that stuff. It's just a very inefficient, antiquated system, and it's a double-edged sword too, though, right? Because all of a sudden we go to the digital currency, it's blockchain, and now privacy's out the window, control's out the window. Like, no more cash, no more trading. Like, it's all there. So be careful what you wish for sometimes, boys.
Well, here's an interesting thing, and Chris Ash said this earlier about FDIC. So we're talking FDIC, and we're talking about it as like the almighty, but they're saying, no, it wasn't a bank. But what does FDIC actually have to back all of our deposits? Well, I just went to ChatGPT right now, and I said, how much as of first quarter 2026 does FDIC have? Now, brace yourself, folks. The Deposit Insurance Fund has $157.4 billion. Did you realize like one person could have that much money in a bank account? But anyway, let's keep going. The reserve ratio, this should blow your mind, 1.43%. Just let that sink in. 1.43% of estimated insured deposits, meaning the estimated insured deposits, approximately $11 trillion, brings that to the FDIC actually has about 1.43% of the money needed to back bank deposits. How's that make you feel, folks? Should feel real good. How much money is backed in your whole life insurance cash value? Well, what's the ratio there, Steven? Do you know?
It's 1-to-1, isn't it?
1-to-1.
1-to-1.
100%, because banks and insurance companies operate completely different. FDIC surely thinks that 1.43% of the money needed to back the banks is sufficient, where insurance companies are like, no, we made some promises. We made some guarantees to you that we're going to make sure you have guaranteed interest and a death benefit. And guess what they've got? 1-to-1 ratio. 100% of the money that would be needed to pay out on all the cash value and the death benefit. That's what the insurance companies have based on actuarial tables. So just put it out there, not trying to make this about specially designed whole life or infinite banking, but it does raise the question of,
just as a quick side note, Chris, in the year that I've been helping you guys out with this show, do you know how many times we've talked about a bank failing?
A lot.
It's been about at least 8 times that we've talked about some type of bank failing on the show. How many times?
There's been one insurance company that has failed, and they were not even a good one. Phoenix Life.
That's so crazy.
Still, the writing's still on the wall there because they're just trying to figure out how to pay everybody out.
That's just so interesting. Yeah.
1 versus 8. And that's just the ones we know about.
Yeah.
All right. Well, let's move on to Comcast. I don't know how many of you watch cable anymore, but when I turn the TV on, which is usually for about 15 minutes at night, that's it, to watch Bluey for my daughter, we don't go to cable. We go to Prime and Roku and one of those other ones. And we were talking about the scam there. If you're in Prime and you want to watch a movie, you got to buy it, right? So you buy the movie, and then that movie should be yours forever. But if Prime changes something, and then all of a sudden, which just happened, I went in to go to the normal 15 minutes before Viv falls asleep watching Bluey, and now they wanted us to buy Bluey again. But anyway, the whole point I want to get back to is Comcast just split. Okay. Because really, if you want the reason, and I don't want to spend a lot of time on this, but cable, it's just dying. So they had to spin it off. Otherwise, it would have brought the whole ship down. And then there's an interesting thing that Fox News just did, or Fox conglomerate just did. They bought Roku for $22 billion. And James, I know you and I were talking about it, saying that that was a really smart decision if they're going to protect it, because cable's dying, and these I don't know what you call them, but the Rokus and the other ones, they're all taken over.
Well, here's something that's pretty interesting that most people don't know, is that Roku is able to deliver the same type of personalized advertising that social media offers. So because you have so much consumer data from people who watch Roku, because pretty much every single streaming platform is available on Roku, all that data that they collect gets sent back to whoever the owner of that corporation is. And now with Fox being able to have this data, plus all of their other recent acquisitions, Fox has reemerged as one of the most largest players in the marketing broadcasting segment. Traditional linear media is dying. It doesn't matter if you own a cable station anymore, because the demographic that watches traditional, coaxial plug in the cable is going the way of the dinosaurs. Unfortunately, it's going out with the boomers and late stage Gen Xers. But everybody else cut the cord a long time ago, and they go to all of these streaming platforms. Even the televisions that you buy that are from Roku, did you guys know this? They take, I believe it's somewhere upwards of 100 images on your screen at any time, so they know what you're watching, how long you're watching it for, whether you're playing a video game or if you're just playing something else on the television, which we don't want to talk about on a streaming platform here. So they have the data, and once they have that data, they can use that to attune to marketers to sell right to you, to have the best ROAS possible.
I agree. Look at YouTube and Google. I mean, that's a perfect case study right there. I mean, more and more people are watching YouTube from their televisions than ever before in history. And that's going to continue to grow. So it's gonna be interesting to see the dynamic of what happens with YouTube. But you want to talk about a data play? That's the biggest data play in the world. But let's check this out from Gary coming in from Facebook. I want to go back to the banks. Gary was asking, how would you take your money out of banks and put it into the policies and still use it for everyday life? This is a really good question. I've done, I don't even know, more than a dozen videos on YouTube on this, but you can't, Gary, and that's a good observation. You really would never want, and I would never teach people to take money, all their money, out of their banks and put it into policies. Number one, the insurance companies wouldn't allow it. They won't let you put 100% of your income through the policy. It's a percentage, and different insurance companies have different percentages. So that's number one. Number two, you would never, or at least I don't like teaching this. I know Nelson Nash talked about it in becoming your own banker, but I don't think that using your policies or the infinite banking concepts to pay your household bills is smart. I don't do it. And I would never condone it. I would never teach it. And I would never say it's smart. Even though somebody could make the point mathematically after like 10th year, I just don't see that as ever being a good use, because the infinite banking concept is about taking back the banking functions in your life. But it does not mean that all your money for traditional bill pay should be done through insurance companies. Insurance companies are not and never will be set up like a bank with bill pays and the online stuff. They're just not, that's not what the purpose is. That's not the use case. So it's a really interesting way to look at it. So I would say the shift for most people listening to this, Gary, would be not to think of moving all your money out of banks. That's really not feasible. It's just not. I mean, as much as we'd all love to say it is, not. You keep a small amount. And I am the perfect poster child for this. I keep such a small amount in banks, and every single, actually weekly, we might move money from various different accounts like Schwab and even sometimes my policies over into or business accounts, mostly into my personal account to cover my expenses for that particular week or month. I know it's a little bit of kind of movement, but it still allows me to feel comfortable that I don't have too much sitting in banks, because number one, I don't trust banks. Number two, I hate going into banks and the experience I get. They're except for credit unions, they're just not happy people. And number three, I don't want the bank making 400 to 1,300% on the money that I leave there. So I just give them a lot less, but I keep enough to make my normal expense bills, like my normal monthly expenses. And a lot of our expenses go on a credit card. So that buys me an additional, call it 25 days, interest-free, to use the credit card's money. And then it allows me to aggregate all my expenses in one place and just write one bill pay check or just one check to pay the credit card off. So again, sorry, I didn't mean to go long into that, but it is a really good point, Gary. You can't, but you can do things smarter. You can do things more efficiently, and you can definitely avoid the problems that a lot of these folks are having where they're keeping too much money in the bank. So rule number one, never, ever, ever, ever keep more than $250,000 in a bank, period. You're just foolish to do that. Okay. So that's rule number one, but then take the next steps of getting as little as you can into the bank so that you can then make your normal monthly expenses and anything else that would be deemed savings. Money for a purchase of a car in the future, money to pay off your mortgage in the future, money to go on vacation in the future. That money is what you changed and put into the policies. Sorry to go long on that, but it was a really good point.
Yeah, that's a great thing, because a lot of people need to understand exactly how whole life works. I mean, we brought up a lot of the raw stats. We talked about how many banks have gone out of business, how many pseudo banks have gone out of business. But if you were to ask 10 people on the street, 100 people on the street, where's the best place to keep your money? They will still traditionally say a bank. And before I turn this into a commercial, for insurance companies, if we introduced that idea to people, say, hey, there's a better place to put your money, a more advantageous place to offer your money where you can save and spend at the same time. And I said, yeah, use an insurance company. Well, they'll say, well, isn't that risky? How do I get to my money? And like, I can only get it when I die. And that's what I think financial education comes into play, because that's where once you start to take that dive, once you start to learn, you realize what all the benefits are. Once that light bulb comes off, it's amazing. So financial education is something that we're going to really need to know about. Nagy, unless you've got something to add, I think we should probably talk about the economy and some financial education. What do you guys think?
I think so. Stephen, I want to move this over to you just as we're talking about the economy. I want to talk about gold, because you're really big into precious metals, and there's some interesting things happening with gold as it's facing the worst quarter in 13 years. Now, that, by no means does that mean that gold is not doing well. I mean, gold, I have the stats here. Gold is way up. And I'm trying to find that here, but we'll go into that in a second. But gold is up, I think, 21%. Okay, 21.7. But from the peak to where it is now, it's down like $1,500. Stephen, what is your take on gold and silver and the price fluctuations we're seeing now in lieu of the Iran-U.S. war and the strength of the dollar, so on and so forth?
Yeah, I mean, we talked about this last year when it really started popping. So if we look over the last, 1 year, kind of starting last summer. It really popped way up. And like you said, it's kind of been correcting down a little bit, I guess, so to say. But,
right.
Precious metals are one of those interesting topics. I mean, I think in the long term, precious metals, will always go up. There's always a usage of them, whether it's gold, silver, platinum, whatever the case might be. But at the end of the day, it's always supposed to be like that backstop for the dollar, or that inverse, when the dollar's struggling, precious metals will pop. Or when people worry about what the dollar's doing, they'll get back into precious metals and make them pop. And we saw some of that last year. I think as it kind of loses its steam. I think the big players, the big financial institutions take their profits, and really drive those markets. I don't think individual traders, just like stocks, I don't think individual traders really make much of a difference there, unless we look at some of these meme stocks like we talked about, Wendy's last week, or, GameStop and AMC of years past. I'm always a big proponent of, hey, buying precious metals, in my opinion, can't be a bad thing, but is it a short-term play? No. Are they easy to store? No. If you buy them in indexes or in an IRA, you can't physically hold them. So to me, what's the difference in just buying stocks or something else? And so it's kind of, there's all these nuances involved with it. But, when you can buy it right, I think it's a cool thing. I mean, you can wear it, wearable investment, so to say, if you like jewelry. The diamond market's another very interesting market, but
absolutely,
it seems to me, Chris, that it's just kind of correcting a little bit, and as things kind of smooth back out right now with the dollar, we're kind of seeing that.
Yeah, and I guess unless anyone thinks that 21.7% over the year isn't a good return, gold's been pretty good to them. But if they bought gold at the peak and now they're sitting at 4,020 as of today, like, woo, that stings a little. But that just goes into FOMO, right? People always invest at the wrong time. And I should say always, but a lot of times invest at the wrong time because FOMO kicks in. Oh, I'm missing out. It's going to keep going. And then all of a sudden, what's it do? It goes the exact opposite way. Look at Bitcoin. How many people bought Bitcoin over $100 because, it's going to the moon?
100K, yeah.
But you know what I've been doing? I've been gobbling up Bitcoin at the prices it's been at, because it's at a level. It's at a level where it could still go lower, and I would continue to buy. But we're at a pretty strong resistance level where it very much could bounce, and it has been. I'm not making a case for investing in Bitcoin. It's not investment advice. I'm just making the point, don't buy high.
No. But the FOMO is so real, Chris. You must admit, FOMO is such a powerful thing.
Oh, it's beyond powerful, especially
it also shows like how headlines are so sensationalized. Like gold is having its worst quarter in 10 years, but look at the 10-year chart. Like
right. It looks phenomenal.
Absolutely.
It's kind of, but it shows.
We got a question here. We got a question here. If you have a HELOC, should you use the policy to get rid of the HELOC and work your monthly expenses from the credit cards?
That would require a call, because there's several different scenarios where that could play out different ways. You really, I wouldn't want to give you the answer to that unless I fully understand how you're using the HELOC, and then how that would play in. Because there's a lot of cases where if you use your HELOC to pay your bills, like we would call that like the all-in-one or the first lien HELOC stuff, then you can make a case. It's a lot of work though, and you got to have systems to set that up, and you got to be managing that. Otherwise, it can go afoul. I always like the idea of paying the HELOCs down. Especially right now where interest rates are high. When interest rates were low, that's a totally different scenario. But remember, HELOC rates are going to follow prime or follow the Fed rate, which there's discussions going on today about that.
Yeah,
might as well bring that up. So I think, for a better answer of that would be just to jump on a call with us.
Absolutely. Absolutely.
But we gotta move on to the next topic before we run out of time. And I love what Damien said about silver. Silver's been on a tear, but yeah, silver's not slowing down because of the use in AI and data centers and war. I hate to say that, but Social Security is something that we definitely need to put our eyes on. It's going to run out of money in 2032. Sorry, surprise.
I feel like I've been hearing it's going to run out of money.
Yeah, for like a decade, right?
I mean, is this true now? I mean, I feel like it's like climate change. It's always going to be the next decade is going to be the end of it all, and then it keeps going.
Yeah. Well, here's the thing. I mentioned it earlier. I don't see, under the current administrations or the current way politics plays, I don't see a way where they will ever not continue Social Security, because you're buying votes. Like, imagine going to seniors who are huge voters, okay, and telling them, hey, your Social Security is going to go down from an average of 2,071. You're going to take a 22% cut, and it's going to go down to 1615. You think they're going to vote for that administration? No, not even close. You know, so I don't know what the answer is. Well, I mean, just like a couple people had mentioned it earlier, we're the answer. The taxpayers are the answer. We got to bail it out because too many hands have gotten into the cookie jar of Social Security and pretty much wiped it out. And yeah, you're talking about 71 million recipients today. Okay, 71 million. That's 71 million votes. You can do the math and figure that out. There's nothing happening here, but it's just going to get worse because there's lower birth rates. Less people are having kids or at a lower rate. There's fewer future taxpayers, period. End of story. Like it just doesn't balance it out. Plus, Social Security was never set up to be a primary retirement, but it really is for a lot of people. And then it was never built for that. There's reduced immigration, which means fewer workers paying into that. So there's lots of factors here, but you're literally talking about $170 billion drain from Social Security through 2034. It's done.
Yeah. No matter what, people are going to continue to pay into Social Security until they officially axe the program. And another point to consider is that the government, like you guys mentioned, will eventually have to say, like, we're going to bail it out one way or another. If we have money for this and we have money for that, fill in the blank on what particular program or operation that you choose, is still going to say, hey, look, Social Security is going to work in this particular capacity, but it's going to be at a reduced capacity. Maybe it'll be responsible spending if the government ever gets its act together about that. But I think it could be a degree of fear mongering that goes on with this when they say that Social Security is going to run out. I think it's a good way to grab a headline, and it's also a good way to grab votes. You know, I wish I could find a way to disagree with you guys on this, but I mean, the writing's on the wall, and the elephant is tooting his horn in the room. It's still going to be here one way or another, and if they're not, they're going to do something else to adjust it.
I think Ben nailed it. The distract, divide, conquer, obey. I mean, taxpayers got to bail it out. That's always been the case. All right, let's see here. Let's see. Let's move on. I'm just going to do a quick recap, because we got all the stats here, and I think this is good, and then we'll move on to the next segment. But this is kind of just a year in review. I think it's pretty good now that we're coming up on July 4th, 250 years of the United States of America. And this is the economy section. So I want to kind of go through some of this. So again, we started with gold, so I'll start there. Gold, 33.03 per ounce in July of 2025. Okay. And it's 4,020 today. That's up 21.7%. Gold, yeah, it's really good. Gold peaked at 55.95 in January 2026 during the peak of the Iran war because people were fear and the dollar pulled back. But the dollar has strengthened. The rate hike fears also have returned. So that again brings up the dollar. And then silver. Silver's a good story. Approximately $34 an ounce a year ago, 58.77 today. That's 68%. Steven, you got any silver? I got some silver in the safe here. But anyway, not too bad there. I never really looked at that, but that's pretty darn good. Silver surged and will continue to, because it's such a huge piece of AI data centers, solar panels, semiconductors. They're 60% of the annual silver supply usage. So if you think silver is going to go anywhere but, pretty steadily up, then I think you're not understanding supply and demand. Let's see. The US dollar weakened through most of 2025 as the Fed cut rates 3 times. Now it's near the strongest level, a year past, mid 2025, mid 2026. Strong jobs data is one of the reasons. Sticky inflation is killing rate cut hopes. We'd hoped that we'd see rates down, and I am one of them. I definitely was hoping rates were going to go down, but that's flipped. Okay, so right now, 65% is the odds of a rate increase in September. Do you know what that's going to do to the real estate industry? That's already pretty well, excuse my language, but fucked. It's going to double fuck it. Inflation, let's see, 2.7% was where we're at in 2025. And now core inflation in 2026 is above 3%. So moving the wrong direction. And there's a lot of reasons for that, namely the Middle East energy costs, for oil. because
And Chris,
yeah, Iran
real fast on that. I mean, just breaking news just coming out. I mean, Fed chief, so the new Federal Reserve chief, Kevin Warsh, he declined to comment in his meeting on July rate decision, but says inflation is too high, and that's kind of what's driving some of what you just mentioned just now. Just to kind of share that.
You know, and it's easy to understand why inflation's high. It's not like it's some hocus pocus thing. It's not, you know, I know we always want to say tariffs, but you know, a lot of these companies are getting refunds for the tariffs. It really comes down to oil. If oil is high, then the price of everything else is high. There's no ifs, ands, or buts about it. You got logistics, you got manufacturing. Oil's part of everything. You know, the Rockefellers did a great job of making sure that oil was in everything. So therefore, when oil price goes up, everything has to go up. So that's really what you're dealing with here. Is you're just dealing with purchasing power is just not keeping up. And that's another important thing to look at here is, you know, you got the jobs market, right? And you got expectations of what Wall Street expects versus what's actually happening. Jobs are plentiful. I mean, in a roundabout way. So I've talked about the three-legged stool, and jobs are the last leg holding this economy up, and they're still strong. Purchasing power, however, is not. So this is where there's a huge disconnect between Wall Street and Main Street, because Wall Street is saying one thing. Oh, markets are all-time high. Well, not today. It's going down. But markets, blah, blah, blah. And then you compare that to Main Street, like the kitchen table, if you will. The kitchen table saying otherwise. You know, the economic dashboard saying, oh, things are good. And then the average person at their kitchen table is having a hard time to put food, or having a hard time putting food on the table. I mean, it's a crazy thing going on here right now, but it all comes down to purchasing power is not keeping up. So that just means that consumers can't buy as much as they used to. And eventually we know that the music stops, just like that one song.
Absolutely. And Chris, we got some great comments coming in. Chris coming in saying oil prices are dropping, inflation hopefully follows soon. And it's important to remember that oil, whenever there's a conflict or something like that, oil prices go up like a rocket and they come down like a feather. So there's a lot of damage to infrastructure. There's going to be a lot of repayment and rebuilding going on in terms of oil infrastructure. So hopefully we will see that, but they said it could be up to 3 years with all that stuff. Next up, Social Security needs to go away. I know we were talking about that. Give everyone back their money and let them figure it out. Good luck with that. And Chris, we got another very good question here. So is it right now a good time to buy a home and use the value in your policy as the down payment? Which one of you guys want to take that question?
I don't think it's ever a terrible time to buy a house. I mean, prices are still elevated, and depending on where you're at in the country, they are coming down. So, you know, there's an argument to be made that waiting, you might be able to buy a little bit less. And I think one of the big problems right now is interest rates on mortgages, but you could always refinance those. Using the policy, loan as a down payment. Yeah, that's always been something we've talked about. However, you got to recycle, recapture. So the way you'd have to look at that is by using the money in the policy as a down payment. That's great. You can do that. But what you have to do is, remember, you got to be an honest banker. So the way I would do it, okay, is I would look at if I wanted to use money in my policy as a down payment, which I have on real estate, I factor a rate of 6, and actually I'm at 6.5 is what I'm doing now. And I repay myself back just like I would pay a bank. So I look at it like if a bank would finance 100% of my home, which we all would take that if they would do that, then I would have to pay the bank interest on that. And whatever mortgage rates are today, if I took $100,000 out of my policies, put it down on a house, I would do a note for 30 years at 6.5%. I would literally treat my money the same way I treat the bank's money. And if you did it that way, game on. That is a great use because it is pretty much guaranteed you're going to pay yourself back because it's your house, right? That's how.
Yeah. So Chris, just really quickly, you did say you can refinance, but refinancing resets the financial clock. It puts you back on 30 years. And of course,
yeah, but it doesn't matter if you do it in the first 3 years of your mortgage. It's not really gonna make much of a difference. But if you refinance anytime after the 8th or 10th year of your mortgage, you are literally committing financial suicide.
Okay. And how is that different versus recasting? Which one scenario would you want to use, recasting versus refinancing?
Recasting would be the better one to use, which is basically where that's if the bank will do it. They'll just recast your mortgage forward based on, a different assumption.
Okay, that's good stuff there. We got Paca coming in here. Okay, Paca's got a great statement. There is a 1 ounce gold Liberty Bell coin by the U.S. Mint being sold for $19,000. Nagy, I'm not sure if you could pull that up. Only 2026 being made. Figure that out. That is a pricing premium if I ever heard about it. I mean, guys, I got a bootleg gold Liberty Bell coin that I can sell you guys for $5,000, $8,000. Just let me go make it real quick if you guys want the bootleg. How's that sound? Nagy, you want that? You want in on that? Absolutely. So, I mean, people will say that you're buying, a limited item. There's going to be, it's a collector's piece, and it's going to do nothing but go up in value. And, for certain things, it makes sense to buy collectibles.
Listen, dude, I would buy that before I would buy a Pokemon card or whatever these people trade for hundreds of thousands of dollars. So collectibles, I've never really truly understood the high end collectible market.
Well, yeah, I mean, there's collectible cards, right?
Even art, right? I mean, it's just, I get it, but I also don't. It's one of those things you just got to kind of say, okay, it's right for somebody.
Yeah. We can't underestimate the emotional premium that these marketers put onto our brains, for sure.
Well, one of the other things, I love that amortization is the final price. Yeah, people need to understand amortization because it's so rigged against you. When you take a mortgage out, oh, my mortgage is only 3% or 4%. I'm never getting rid of it. Now, that's great if you hold the house all the way for 30 years. But if you sell the house in the first 7 years, which is the average time frame that people will either sell or refinance, you lost the battle. You didn't pay 3%. You paid like 60 some percent because all the interest is up front. It's not hard to see it. And actually in big, bold print, I've done it. I've just did a mortgage on our place out in Ellicville. It says how much money you pay in interest. It's crazy that people just are like, oh, I don't know what that means. It says 68 or 8. I think mine was like 70 some percent you pay in interest. It's like, well, okay, understand amortization. You understand that. There's another big miss that I want to hit in this, and this is kind of more in the WTF weird category. Actually, you know what? Let's switch categories because I'm sick of talking about the economy. Let's hit the weird shit. What the All right, so Nike. We all know Nike. I mean, most of you probably have Nikes on right now. Well, Nike had a unique opportunity. For years, they knew that the World Cup was coming here to the U.S. And Nike is a worldwide company, so they know the demand for World Cup jerseys and all the different things around the World Cup in, other countries. Well, they underestimated the demand here in the U.S. in not just a little way. Like, in a way where they literally sold out of jerseys in just the first couple days of this. So they're missing out huge and they're getting roasted about it. Stephen, James, you guys are following the World Cup more than I am. I'd love to. I just don't have time with a 6-year-old. She wants to play versus watching soccer. So I haven't followed this at all, but there's two major stories here that come around the World Cup. One is the jersey shortage, which I don't know, seems like a really profitable thing for a company like Nike. And then also the ranch thing. I mean, I've seen all the rage and stuff about these Europeans coming over and having ranch dressing for the first time. And all I'm going to say is there's a reason why people, when Europeans come over to the States, okay, for an exchange student program or anything else, they blow up. I'm not saying anything you guys don't all know. Like, they literally get fat quick. And ranch is probably one of those reasons. Ranch is not good for you. Not at all. It is very high in fat, in calories, in bad shit. But the Europeans are freaking out over this. Anyway, let's talk about Nike and whoever wants to pick that one up.
Well, first of all, ranch is America in a bottle. And what a lot of Europeans don't even realize is that there is a flavor in Europe called All American Flavor, and it is effectively redressed ranch. Doritos markets it that way. So it's not anything that is brand new. They just are, since they're actually experiencing ranch dressing on American soil, now they're just absolutely in love with it. And I think it's a great market opportunity for a lot of those retailers out there that are looking to say, look, now we've got this hot brand. Let's go ahead and push it while all these Europeans and Asians and Australians are coming in from all over the world. We can go ahead and market this globally. And some companies have absolutely dropped the ball on this. Hidden Valley Ranch dropped the ball, and Heinz is now picking it up, so to speak, all things considered, with the soccer that's going on. But Nike has been on a bit of a free fall lately. And we've grown up with Michael Jordan, Bo Jackson, and even LeBron James by extension as being the figureheads of American and global sports. But they've been dropping the ball in terms of their core element, which has actually been runners. They ignored that particular market. What happened? On it, and a few of these other upstart companies have been able to basically eat their lunch. And now they're dropping the ball again on the world's global stage, one of the biggest tournaments in the entire world. And Nike did not make enough U.S. jerseys. I mean, the U.S. is doing a lot better than a lot of people anticipated. And with a shortage of jerseys, now it's going to allow other people, secondary markets, bootleggers, etc., to be able to come in and say, yeah, we've got the same product at a better price. It may not last you as long, but guess what? We've got it while you're excited about it. And that's a huge blow to Nike's bottom line. And it's really unfortunate.
Yeah, I mean, Chris, we talk about all the time. Shoe Dog. I mean, one of the great books.
I love that book
all the time. But Phil Knight, the founder of Nike. I mean, I know him and his family. He kind of stepped down as the chair a few years back, but they still own the majority of the company. So I gotta figure he's probably seeing this and freaking out because I mean, what an amazing entrepreneur and businessman he was. So he must be just having ulcers from what's going on right now with Nike. But I just read, I was looking up the shortage of the jerseys, and something else popped up here that I thought was rather interesting. It was saying that Nike used AI tools to design the jerseys, the fits, and some of the styles, and they're getting a lot of backlash on that as well. I guess the fit through the shoulders isn't normal to what Nike's used to, and some of the designs are kind of just people aren't really digging it. So interesting to see, a company diving into, using AI and AI tools and failing.
I think that's a huge thing. I mean, you're hearing about it left, right, and center about all these companies that went all in on AI, auto manufacturers and everything, and they're all rehiring all the people because AI is, just not living up to what they thought it was going to. And, we're in the middle of a major overhaul, workflows, systems, processes, and AI integration. We're taking notes. Believe me, we're never going to put AI on the front line, and we're never going to rely on AI. It's always going to be human relationship. AI is just going to solve simple problems like administrative problems. But I think when these companies put AI at the front line, I think that's what you're seeing happen. Like mistakes, let's not forget AI definitely hallucinates. Now, if you were to ask AI what the best dressing is for your salad, I'd be curious as to what it said. Is it going to hallucinate? Because I personally think oil and vinegar, like Damien is, a little salt and pepper that's my flavor. But I don't know. I wonder what AI would tell you. And sometimes that's how you got to look at AI.
Balsamic. It's always the answer is always balsamic, and blue cheese always goes on your wings, not that nasty ass ranch.
And I love that Lynn said that. Like, people are coming over here freaking out and excited about free chips and salsa. Shit, who is not excited about free chips and salsa? Like, I feel like, in Mexico, they probably pioneered that, and now it's here in the States. Dude, that's the only reason I go to a Mexican restaurant. I barely get any food. I'm like, just give me the salsa and chips. I don't know about you guys, but that's something that gets me excited as well.
Yeah, the trio, right? The guacamole, the queso, and the salsa. Let's go.
Yeah, give it to me. And then then you got to pay for the cheese. But if you're in the mood for the cheese, like, giddy up and go. But the salsa is all I need.
Guac is always extra, guys. Guac is always extra.
Always, yeah. Chipotle, they don't give you free guac in Chipotle?
No, absolutely not.
I'm surprised because it's so overpriced. It's just out of control. I don't know why people go there. Let's talk a little bit about a bill that was put in place to take away our right to vote for U.S. senators. So it's basically a bill that was kind of proposed. It will probably never make it through, but to repeal the 17th Amendment that was put in place in 1913. And that law gave Americans the direct vote for U.S. senators. Now, I don't know about any of you, but there's no way we shouldn't be able to vote for senators. Whether or not we do or do not, that's a right we should always maintain. And one of the things they're saying right now is the same reason why they initially put that 17th Amendment in place is because back in the day, if I'm not mistaken, it was the railroaders and the copper barons were kind of purchasing senators. They were basically funding senators. That same thing happens today in modern campaign finance. You see it even for senators. Like, the people giving them their campaign money to run and to win are the ones who are benefiting from the laws and the different things they're proposing and doing. I mean, it's the good old boy, problem that is resurfaced. And that's why they're now saying, well, maybe we just take away that right to vote. But I don't know. I don't really have a dog in this fight. I just think politics as a whole in this country have run their course, and it's always been said. And I don't remember, Stephen, there's this old saying that every democracy has a run life of, is it 250 years?
Something like that. Yeah.
250 years. But and where a democracy ends is when politicians find a way to buy their votes. And I think 100%, no matter what side of the aisle you look at, they have figured that out, how to buy votes. I mean, with Biden saying, hey, we're going to pay off all your student loans, vote for me. And then did you pay your student loans off? Fuck no. Same shit's happening right now, but I'm just making the point.
Thank you, Chris.
I don't like Biden. He's just, I think he'll go down as the worst president in history, but nonetheless.
Absolutely not.
Yeah, 100%.
Absolutely not.
Oh, 100%. No ifs, ands, or buts. Who's worse than, well, all right, so maybe not the worst, but the top 5, no question.
Okay.
Stephen, who do you think is going to go down as the worst president in history?
Joe Biden.
Absolutely not.
Who's going to go down as worst president in history then?
Worst president in history. I think we should look at the numbers first, and then that way I can give you a more formative answer, and we'll agree on some metrics, and we can do that as a great follow-up. I don't think it'll be Joe Biden. And I think that a lot of people will have to consider whatever economic circumstances that they inherited versus what the end results were.
Well, actually,
all I know is that
it won't
Biden
will be the auto pen that goes down as the worst president in history.
That's quite interesting there. And yeah, I mean, we can look at the numbers. Biden's numbers were trickling up at the end of his presidency, and then for some reason, some of these economics went down when the next president came on. But we won't get too much into that because then we'll start.
I'm just saying, as a whole, the worst president in history. I'm not saying economically or anything else. I'm just saying as a whole. We'll cover that one another time because I'm sure everybody would love to hear that argument, at least both sides of it. G. George said, does PMC members, do they lend on lines of credit in real estate? Yes. I don't think it's the commonplace, but I know, like right now, I have a lender who I just sent a payback, like we just paid him back. But for the better part of a decade, when I was heavy in real estate, they gave me a line of credit. So we had a working line of credit with one private lender that we would basically borrow for pieces of real estate. We would do separate notes and separate mortgages on each property for the line, but we knew how much they were willing to pledge to us. So I'm sure that happens still by today. I can't tell you I know who does it, but you got to get in privatemoneyclub.com, register, get yourself in there, become a member, and start talking to the other members and ask. But I would have to believe 100% that happens.
Absolutely.
All right. So last one, let's see. Let's hit this one to kind of wrap it up. I think this will, actually, there's 2 that we could wrap up with, but Democrats, because we were just talking about politics. So let's hit politics. I'm not going to disagree with this one. I don't think it's going to happen, while Republicans control,
Hell no.
the show. But
Hell no.
I definitely think this is a topic that has to be discussed. It has major ramifications. And I'm not sitting here saying I'm agreeing with the Democrats. I'm definitely Republican. Love it, hate it. I don't really give a shit. But Democrats did introduce a good bill that I think is one that should have been introduced a long time ago and has been talked about for a long time, but nothing's ever been done. And that comes down to the federal minimum wage. So right now, just if you don't know this, outside of 5 states, the minimum wage is $7.25. Now, is that what people get paid? No. They get paid more than that, but $25 an hour, you could even argue that $25 an hour is not enough to even for one person to have a family. It just doesn't work. According to MIT's living wage calculator, there's no way somebody could live making $25 an hour in today's world, I guess you would say.
Exactly.
I guess maybe there's certain weird places in the US that maybe like you'd get away with that, like Midwest, maybe some parts in the South. But I mean, I almost feel like that ship has sailed too. I don't think that even exists anywhere in the US, but I could be wrong there. I don't have any relevance. So I just think we gotta do something. I mean, to protect people that are maybe earning minimum wage or close to minimum wage. And if you bump it up to 25 an hour, I think you're going to have some major backlash. That backlash is going to be, excuse me, you're already seeing companies like McDonald's. They went, I mean, how many of you have been to a McDonald's where there's not a single person you can talk to? Does that feel good? You like that? Hell effing no. Like BurgerFi, I'll give you an example. Like BurgerFi's got a wicked veggie burger on a lettuce bun. Love that sucker. I went there in the airport and it was all digital checkout. And I'm like, nope, I walked away. I don't want to deal with that. And if you take and you raise minimum wage for these restaurants, they're all going to go that route. And actually, it doesn't matter whether or not they are or not. They're already doing it. I mean, Whole Foods, I went to Whole Foods, and me and Craig, when we were out in Nashville, we got to Whole Foods and there was nobody, wasn't a human to help me check out. I literally had to sit there and be like, hey, because I couldn't figure out how to use the damn thing. And I don't know. It just didn't work. So that's my take. Sorry, I went long on that. What do you guys think of this?
Well, yeah, with this bill being raised for, to raise the minimum wage from $7.15, just to establish a baseline $7.15 an hour, it's about $15,000 a year. And according to the Bureau of Labor Statistics, that is literally poverty level. That is below poverty level. And of course, people are going to say, I'm seeing this in the comments, as a matter of fact, that is not meant for what people are meant to live on. It's meant for teenagers with their first jobs. But here's an inconvenient truth about all of this. There are people out there right now, fully grown adults, who their only source of employment or the only accessible form of employment are these basically minimum wage jobs, and they are in right to work states. So it is allowed. There are these employers who have a lot of leverage will say, yeah, well, I'm only going to hire you for $7 or $8 or maybe $10 an hour. And with today's rate of inflation, you are still living at a substandard poverty level basis. And now the argument is, okay, we'll go out there and get more skills and make more. If you don't have more to make more, right? How are you supposed to basically become gainfully employed? Let's take, for instance, a trucking license. You are somebody who maybe you didn't finish high school, maybe you didn't finish college, and your particular opportunity in life is to maybe become a truck driver. If it's $10,000 and you have to work 2 minimum wage jobs, how are you supposed to be able to afford that when you still have to cover your basic necessities? We have to understand that there are certain people, actually a large swath of people, who have made poor financial decisions, but who are looking to become better within society and be able to provide more towards society. And maybe an increase in the minimum wage would be helpful. And I know I'm sounding like I'm on the fence about this, but we also have to be prepared for the blowback. That means consumer prices will probably just move up again. It'll just be a moving of the finish line one more time. So that's why I really feel that we have to understand more about this. We have to understand, like, look, this is the ramifications of raising the minimum wage. Consumer prices may be commiserate with this as well. Home prices may come up from this as well, because businesses are going to want to maintain their profit margins. Nagy, you study a lot of this type of income stuff. What do you think?
Federal minimum wage is fucking dumb, dude. It's how can you set a federal minimum wage across this diverse country that we live in? I mean, what somebody makes in Nebraska or Oklahoma is going to be completely irrelevant and nothing to do with what somebody needs to make in California, New York, Florida, etc. Right? And so, why do we even have a federal minimum wage? I don't get it. If you look for a job and they don't pay you what you need to survive and whatever your life is or whatever you want your life to be, then don't take the job and go somewhere else. Like, it just, to me, it makes zero sense.
Well, there was before there was a federal minimum wage, though, Nagy. There was price fixing amongst some of the corporations, though.
Changed, man. Like, things are not the same as they were 50 years ago. Like, you got to just get rid of it. What's the point of it? We're arguing over nothing here. Nobody earns $7 an hour anymore. Anyways, it's states have their own minimum wage laws. People know what's going on. Like, it's an irrelevant thing we're talking about right now, in my opinion.
Okay, well, we see where that's going with that.
I think we gotta get rid of it completely.
Well, you notice how I just dipped out of this one. I figured we were good for a good rant here, and well, you guys did just fine. And I agree with both sides. But the funny thing is like, this was a cool little rant because minimum wage isn't going to get changed, because you want to talk about something that would drive inflation. Doing that would be a crazy hit to the inflation markers right now. So with this administration, you'll never see it. With the crazy Biden Kamala bullshit, yeah, that's probably very feasible. But anyway, I'm just seeding it, James. I'm seeding it.
I hear you. I hear
people.
you, Nag. I hear you, Naugle. But check this out. I'm glad that Paca brought this up. 6267 is UBI, Universal Basic Income.
Yeah.
And Andrew Yang was talking about this, I want to say upwards of 10 years ago.
That's
when he was
what Finland uses, correct?
I think they were exploring that idea, and they were worried about what level of inflation it would increase. And Finland, as a microcosm,
some variation of that.
Yeah, it was something like that. I'm not sure if we have any graphics to pull up on how it played out in Finland, but that's something that we were really worried about, is that AI was going to take so many jobs that we would need to just basically have a UBI model. We're seeing that that's not happening. You know, Ford, just to kind of call back to a previous article that we talked about, Ford, you know, people were worried that all these jobs are going to be gone. The robots were going to take all these jobs, myself included. They laid off huge swaths of people, and we would all have to be on universal basic income. Well, they would just move the goalposts and make these cars more expensive so that Ford could continue to make these profit margins. Well, a few things happened. The AI failed. They rehired a lot of the engineers. They're called the graybeards, and now they're training the new people behind them, the new engineers, to work with AI to make better functioning models for their vehicles. How does that tie into UBI? If AI doesn't take over our world the way that we catastrophized it, if that's a real word, we hopefully won't need UBI. But if we get UBI, be prepared to have UBI and to have a side hustle, and to be, Chris, I know you may not want to do it, but you may have to start up an OnlyFans account. Nagy, you may have to be, I might selling some toes on 8th Street down in Miami. It just may have to happen. But that's a worst case scenario, guys. But don't worry, I'll be there to help you manage all of your funds.
And George also mentioned, James, just as a footnote for next week, let's cover the unrealized capital gains tax. That's a really important one that we have not yet hit. I'd love to talk about that. That's pretty crazy. But I know that's top of the time for us, and you can kind of see where we're going for next week. We did a little bit of a prelim kind of commercial showing you we're going to cover who is the worst president in history.
Best president of all time.
Kennedy. Anyway, or maybe Reagan.
Let's do this. Let's see who has more footage of sleeping in office on camera. Sleepy Joe or Drowsy Don? Drowsy Don.
That'd be a good one. I think Sleepy Joe for sure. But Sleepy Joe never really had the camera on him very often. But yeah, that'd be a good one. That doesn't make a good president or a bad president, but nonetheless, it's one of the metrics I guess we could cover. All right, Stephen, you want to close this down on this, this 250 years of the United States of America and the tribute we did here today with WTF?
Yeah, man. I mean, at the end of the day, America's an amazing place. We're in a really weird, I don't know, weird place right now. You know, we still are in a two major party political system. You know, a lot of people say it's one big uniparty. They're both on the same sides. Seems like a lot of truth to that. There's a lot of problems with the current system, with the process, with how voting works, with how our elected officials operate, and no term limits and everything else that happens out there. You know, so there's a lot of issues. It's interesting to see what's going on with, the MAGA party and kind of the new conservative Republican Party. And it's really interesting to see what's going on with the Democrat Party. I mean, the last 4 elected members to Congress that were Democrats are part of the Democrats Socialist of America. So they're just running very hard and very fast to socialism, which we all know leads to communism and the rest of it. So we've got a lot going on in the country, a lot going on in the world. It's becoming more and more complicated with AI and technology and everything else that we have going on in our lives. It's all, like somebody said before, distractions, dividing. Where does that lead to? Some kind of conquering? I don't know. So that's where we're at as a country, in my opinion. But at the end of the day, look around the world. There's no other place I'd rather be than the United States of America. I am very optimistic of the future. We do have incredible leaders out there. We have incredible people doing amazing things every single day. And I think we'll continue to invest into the future, and we'll continue to be the global leaders. So this weekend, I personally will be celebrating USA. I will be having a great time, and I will be very, 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 very proud to be an American. And with that said, go USA Soccer tonight, win, lose, or draw. Proud of those guys for making it to the knockout stage. True. And Happy 4th of July, guys. Happy 250.
All right. Thanks, everybody, for joining us for this episode of WTF. We'll see you this afternoon for Wealth Webinar, where we're going to talk about the reality of what happens in the real world with an emphasis on buy term, invest the difference. We'll see you then.
See you then. Ow!